And just like that, it's back from the dead. It's like Jack Nicholson in The Shining, right? But instead of here's Johnny, it's like, here is oil. In today's video, we're going to talk about the oil price, geopolitics, but most importantly, oil stocks. There is something happening, and we gonna be in it before the mainstream even notices it. Big video today. Let's get right into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Hello and greetings from Florida, from the Rick Rule Symposium. My name is Daniel Wilhelmi, and we're going to start with some quick housekeeping. First off, Wednesday would be the dividend show. Well, it's kind of a dividend show. You'll see in a minute. But the main dividend show will come on Saturday because I got an appointment tomorrow to talk to the management of a really interesting copper story that plays out really well if you like high yield dividends. So that's our little teaser, Netflix teaser for Saturday. How's the Rick Rule Symposium going? Pretty great, I have to say, and major shout out to all the Hot Trades of the Day heads that came up to me in the past days. Just incredible how kind you have been, how nice you've been. People from all over the world that watch this show. Wild. From Singapore to Europe, Czech Republic, to Poland, Warsaw, right? Shout out to Bart and his beautiful wife or girlfriend, Dorothy, to Chile, to Hagen from Australia. Australia, my man, what are you doing? If I was in Australia, the last thing I would do is watch the YouTube channel of some sauerkraut smelling guy talking about stocks. I would pet a koala bear or fight a crocodile. I wouldn't fight a crocodile, but incredible. And special shout out to Craig, who was so kind. I can't believe you brought me a gift that was really not necessary. This is not vodka, or is it? No, it's just water. But that was too kind. Amazing. With such a global community, and what I really like is very positive people, very knowledgeable, and very interested, and very open-minded, willing to learn, willing to get better. That's why I'm there. I'm learning things at the Rick Rule Symposium as well. We're all learning all the time. Nobody's perfect. To take advantage of this super cycle. And one of the most hated commodities in the market has been oil. It's been left for dead. We all know the story. Don't need to reiterate it. And remember the last oil video? Probably not, because not enough people watch this. And this has been, and I've been telling this to everybody that I've talked to on the Rule Symposium, and I've said it here, a problem of the channel that as soon as we don't talk about gold and silver, a lot of the people are, that is lame. Hey, lederhosen guy, talk more gold miners. I get it. I love the gold miners. But guess what? There's other value in the commodity market, and one of them is oil. And in this oil video that not enough people watch, should have, but didn't, I said it is absolutely unreasonable with the situation in the Middle East and Iran clearly being one of the big winners of the Iran war at this moment, that the oil price is only up 10 to 15% compared to before the war started. The geopolitical situation has deteriorated way too much for this, and any type of shock that we're gonna see gonna make the oil price jump. Well, that's exactly what we're seeing right now. It sure jumped like I would when I would see like one of those huntsman spiders in Australia. There we go, full circle again, Hagen. You probably know more about that than me. I do have a big arachnophobia. After ships were attacked, Strait of Hormuz, and all of a sudden the strait is closed again, and now we're seeing a jump in oil price. Now, let's take a look at the chart of oil. Look, long term, the fundamentals, and it's been a topic here at the Rural Symposium. Let me give you a little insight to this. So obviously, gold, silver, copper, those are the three commodities that are kind of in the forefront. Uranium is getting a little love, not enough in my opinion, but that's quite interesting that it doesn't get that much love. Oil is one of the unloved commodities that is getting traction here, where people talk about that could be an anti-cyclical play. I agree with this. We've talked about this. Man, that we made good money last fall and winter by getting into the energy stocks early. And we'll get to the energy stocks in a minute. And then also some rare earth talk, obviously, some critical metals talk. Interestingly enough, lithium, nobody's talking about lithium. That's really interesting to me. And we'll get to that later at some point. Now, oil. Here we see WTI, and you see the jump. You see that we have been forming some kind of structure, but it is not the type of structure that I want to see in the daily chart in WTI. Now, I want to point out to you negative divergence in the RSI, and I talked about it to the viewers here at the Rural Symposium when we chatted. This is one of the great usages of the RSI. Usually overbought, oversold are really good indicators that we are reaching a top phase or a bottoming phase. But stocks, especially in the overbought territory, boy, they can stay in the overbought territory much, much longer than people think. So using that as an indicator to short, terrible idea. But divergences are always interesting. And we see one here in gold. In oil. We have seen one in gold. But in order to form real structure, and this is what makes the oil price very interesting, we have clear price action that will tell us that something is really changing in oil. And this is this zone right here where we have the 200. We have this downtrend that has been in place since May, and also, which I rarely use because for swing trading it's a little short, the 20-day. But in this case, I want to show you the 20-day. So we broke below it in May, and it has basically pushed oil down. As you can see, we doinked off here, got close here and scared, got close here and scared, right? And it's been leading down this down move in oil. And as you can see, it just so happens that it's also at this double resistance zone. So we really have triple resistance. So we break above this triple resistance zone on the close and confirm it's party time. It's big time squeeze of the shorties. It's flamethrower to the face. We're going to get at the minimum a gap fill right here around 85.20. So that's a solid 15% from here. Now, again, do we want to jump in? Well, if you feel dangerous, you may. I would wait if we break this triple resistance zone. So the line that we want to pay attention to is somewhere around $75.50 to $76. We get there on the close, then we know this is probably the bottom for oil in this down move, and we're going higher. And the interesting part is that the oil stocks are looking a lot better already. So let's get to the oil stocks. And we're going to start with the Americans. Look at Chevron. And I'm going to take the 20 off real quick because, again, I just want to show it to you for the oil price. Now, when we talked about energy, I defined the support zone, and again, that was, we didn't do too bad with this. As you can see, it clearly held, got undercut a little bit, triggered some stops, shook out some hands, and whoop, we're back. And guess what? We closed above the 200-day moving average. Now, haven't confirmed the breakout yet, but you can clearly see something is changing. If you want to give you more feeling of what's going on, you can take a short-term downtrend and put it in, and you can clearly see, oh, we've broken this downtrend. We look at Oxy. Looks even better, right? Same thing. I apologize. This should be blue. Whoop. Let me do this real quick because blue is for the support zone. As you can see, reached the support zone that we had defined. Held up great, got a little undercut. Whoever put up the stops too short to the support zone, but it wasn't so bad. But reversed right here, and look at this powerful move by Oxy back above the 200. This is a power candle that we're seeing right here. This one looks great. And how far can we go? Well, gap fill here, gap fill here. If you like close gaps, we got one right here, and this is pretty close to 50-day and downtrend. So let's say that's around, let's say like 55-ish. If you want to do a swing trade on this, put some risk on this, try to get in around 51. If we get a little short-term setback, that's an interesting trade. European market, Shell. Almost the exact same scenario. This looks great. Look at the breakout. Look at the power. Look how we closed in the top quarter of this long candle. That means no selling pressure in the end of the day. But here's the one that I like best. And man, judging by the conversations I had at the Rural Symposium with some of you, a lot of people were in on the Petrobras Samba party, and this one looks great. This is Petrobras, the big Brazilian oil company. Help me out a little. I think I talked about it somewhere around here, right? In the fall, I want to say $12, $13. We ran it all the way up, almost the double in no time. Then we had a steep correction, but look at this. Didn't even touch the 200. Reversed right before it, and downtrend that has been in place since the end of April, beginning of May. So 2-month downtrend broken. This one looks even better than the European or American oil stocks. And again, as I've said before, what I really like about Petrobras is that you get the Brazil exposure basically on top, right? You not only profit from the oil story, you also profit from the emerging markets Brazil story. By the way, was a topic today in one of the presentations today, how cheap Brazil or the emerging markets are. Basically, valuation is like a third of the Brazilian market than what the Nasdaq is. Now, can't compare it. It's not apples to apples, right? Because Nasdaq tech in Brazil, but this is why I like Brazil. Commodity heavy and consumption heavy. Some banks are highly weighted there. But Petrobras is, for example, one of the top 3 stocks in the Brazilian market. And that stock, that might be something for you option players, right? Like Bart, I see you, right? Maybe that's interesting to you. This one has great upside, right? Gap fill here, gap fill here, gap fill here. Man, there are a lot of gaps. There's another gap right here. But that one, if we get this gap, we are already above the 50-day, and then it's party time. So the oil stocks are moving. Remember what I told you last fall and winter. If you're following the channel already, I was telling you, hey, the oil price is not moving, but something is up because the oil stocks are moving, the energy stocks were moving. The Americans, the Europeans weren't doing much at that point. They started to join the party later. Clearly, institutions are positioning themselves for a rally in oil and energy. That was my thesis then, and it played out pretty good. We kind of are seeing the same thing here, right? Looks like it's repeating itself. Oil looks better, but as we talked about, still below the 200, has this double, triple resistance zone, 200 day, 20 day, and the downtrend. That's going to scare off people. But the oil stocks, not all of them, but for example, some of them that I just showed you, they look a lot better. So if you're not in energy at all, might be worth a look. But then again, I'm not your financial advisor. I'm just a schnitzel guy. That is it for today. We will talk tomorrow, and I wish you a great day. Bye-bye.